Planting across the state continues to roll on, with Nebraska farmers nearly finished with this year's corn crop at 98% complete. 78% of that corn is now emerged. Soybean planting is 13 days ahead of the average at 83% complete. Other crops continue to stay ahead of schedule as well. Wheat is 81% headed. That's 19 days ahead of normal. And first cutting of alfalfa is 3 weeks ahead of the average. Grain markets reacted to those positive conditions after Monday's report. But as Ron Plain says in this week's market analysis, the crop is far from harvested. This may, however, provide some relief to hog farmers who have paid extremely high input prices for more than a year now.
It sure looks that way. USDA is saying we're going to plant more acres of corn this year than any year since 1937. They're also forecasting a record yield per acre, so almost 1.7 billion bushels of corn more than the old record. So if the weather cooperates this summer, it's quite likely we could see a $1 per bushel drop in corn costs by the end of the year.
Like you said, if weather cooperates, we're still a long ways from it. But what does that do to the break even? Where is it now, and where do you think it could go by the time we get into that new crop?
Well, on a live weight basis, we've been looking at break evens 65, 66 cents a pound. We could well take a dime off of that if we have a good summer as far as the crops is concerned, and move down to the mid 50s, hopefully, by the end of the year, early next year.
Are we going against seasonal trends? I was reading something you had written earlier in the week, or maybe it was last week even, that you thought that the prices might be going against seasonal trends.
Well, normally spring's a pretty good time for hog prices. April retail pork prices are usually higher than March, but this year they were 3 cents lower. Normally we increase hog prices more from the start of May to the end of May than any other month. We're a long ways from doing that this year, so yes, we're seeing some slight improvement in prices, but nothing like we normally get at this time of year.
What are we seeing in terms of slaughter weight? It's been a relatively fair spring, but as we get into these hotter days, what do you expect to see there?
Well, weights have been up all year long, and we're running 1 to 2 pounds on an average carcass above a year ago. Normally, hot weather hurts rates of gain. Pigs go to market lighter. It should heat up this summer. It almost always does, and that should pull down weights and thereby reduce the amount of pork on the market and should help our prices.
Right, but there's still low demand. Why is there still low demand? With what we've seen from falling gas prices, that's still not enough to remedy it?
Well, yeah, demand looks like it's getting softer here rather than stronger as we move into the summer. You mentioned energy prices. High gasoline prices were a drag, we think, on meat demand back late winter, early spring. They've been falling here in recent weeks. That's some good news. We can also use some good news in the economy and more jobs. You know, it takes people with money in their pockets to drive up meat prices.
And obviously there's going to be that battle with beef prices as well, and as we've seen from the last cattle and feed report, that supply is going to be tight too.
Yes, there's not going to be much beef on the market, and that may be good news for hogs. Record high beef prices should provide a little bit of cover and make those pork chops look a little bit like a bargain in the meat case.
Let's talk about exports. Exports were at extremely high levels last year. Where do you see them this year and then even going into 2013?
Yes, 2011 set a new record for pork exports. We were up almost 16% in the first quarter of this year in exports compared to a year ago, but we're not near that optimistic for the second half. Two of our big foreign customers, China and South Korea, have substantially more hogs than they did a year ago, and that's probably going to mean they're going to buy less U.S. pork in the second half of the year, possibly a lot less than they bought in the second half of 2011.
And weighing into that is obviously the strength of the dollar and how that weighs against the European issues that they're having across the sea. How do you diagnose that, Ron?
Well, yes, if you've been following the financial troubles of Greece and some of the other countries in Europe, it's a real problem. That's created a lot of concern about the euro. The lower euro values basically means higher dollar values, and a strong dollar is tough on exports. So for the time being, it looks like the dollar's likely to continue to strengthen, and like I said, that's not going to be good news for meat exports.
So as we close out, let's take a look at the futures prices. Do you think it's an opportunity now to lock in prices or to hedge at all?
Well, I'm, thinking that patience may be better. The futures market expects prices to move higher into August, and they're fairly optimistic for 2013. I think there may be some opportunities to hedge deferred prices, but I'd probably wait till a little bit later in the summer when things get hotter and weights come down, and hopefully hog prices rally some more.